Alright, what's good with y'all, man? Welcome back to part 2. Welcome back to class. Get y'all notebooks out and let's just get straight into it. Today we're going to be going over part 2 of how to get started as a beginner with futures trading. So I'm gonna try to keep this video between 10 and 15 minutes again, but if I do go over a little bit, my bad. What else? If you new here, it's your first time watching, like and subscribe, and go and watch part 1 if you're a beginner with trading, and then come back and watch this. So I ain't gonna waste too much time. Let's get straight into it. I'm about to go over brokers and platforms, types of orders, and I'm gonna do a quick explanation of prop firms. So brokers and platforms, that's basically what you need to trade. So a broker is how you execute trades, and then a platform is basically like trading view, what you view the charts on. So the main platform that everybody uses is trading view, and this is what I'm on right now. It is subscription based, so but there is a free version that you can use, but you won't have as much I don't know what word I'm trying to say, but you won't have as much as somebody who got the subscription. And then different brokers, these are brokers up under here. These are different brokers that you can sign up with, but do your own research. You could probably find a video of tutorials on how to use each brokers. Some are more simple and some are more complex, so it's all about your personal preference. And then this is the types of orders. So you have a buy order and a sell order. That's just your basic manual orders. To you buy when you want price to go up, and you sell when you think price is about to drop. Stop loss orders, that is a point that you set an order, a price that you set an order at, to where if price hits that point, it automatically gets you out of the order, so that just to help you manage your risk and stop you from losing more than you should. So yeah, take profit orders, that's just to help you secure profits fast, secure profits easier, because sometimes price may spike up to the level that you wanted it to reach, and then go back down real quick. So if you set a take profit, it'll automatically get you out at that level, securing your profits. Buy limits and sell limits, those are basically just so say you price is at a certain level, and then you think that it's gonna go up, but you don't want to enter until it hits a certain level. You will set a buy limit at that level, and once price hits that level, it'll automatically trigger you into a buy position, and that's just how you can get sniper entries, and just make sure you're getting in at the right level. And sell limits is the same thing. It's just price, you do that when you think price is going to go down. And then prop firms, so basically prop firms is just a company that gives you bigger positions, bigger monies to buy with. I don't know what the hell I just said, but they give you money to buy with, so you have bigger buying power than if you were to start with your own money. So say not everybody has 50k or 30k or 10k to go throw into a trading account. So say you can go to a prop firm and you can pay a small fee and they'll give you a 50k, 10k, 20k trading account, and then you can trade with that, and the profits that you make on that, they get a percentage of it, but you're getting majority of that. So that's just a easier, quicker way to start making money with trading. But they do have more stricter rules, and it can be harder if you're not disciplined. It's harder to get payouts and pass the challenges. So I have been funded before, but me personally, I really just want to use prop firms to fund my live account, because ultimately the live account route is better because you have more freedom. Like with prop firms, they may have a certain number of contracts you can lose, and that may mess you up when you're trying to risk a certain amount of money each trade, but you can only put a certain amount of contracts. So yeah, prop firms is just, it can help you, but they're much more strict than having a live account, so it's gonna be harder to get funded. So types of future contracts. So futures, you can trade commodity futures, financial futures, and currency futures. So I started, those of you who are familiar with forex, you can trade the same currencies that you trade in forex in futures. So like the US dollar and euro and stuff like that. Financial futures is basically just like stocks, NASDAQ, S&P 500, US 30, stuff like that, and different stocks and commodities like oil, gold, and agricultural products like farm stuff. Minis versus micros. So minis is more like the bigger contracts for, well, not bigger, but minis. You're gonna want to trade minis. You're gonna want to trade minis when you have a bigger account size. So I would say if your account size is under 20k, if your account size is under 20k, you're gonna want to stay away from minis and trade micros. So micros is basically the same thing, but it's less, the contracts are worth less, so you're able to put on more contracts while risking less, if that makes sense. So mini contracts, they're the big contracts. Micro contracts, they're the smaller contracts. Margin, I went over this in the first video, but I'm gonna go over it again, and I'm trying to hit it quickly, but this is something important that you need to understand. So margin isn't the same as the full price of the contract. It's a small amount of money that you put down to open a position. So it's basically like a deposit that you put down to open a position. So there are two types of margins that you need to know. So initial margin, that's the money you need to open a trade, and maintenance margin, this is the minimum amount you need to maintain your position. So if your account balance drop below this level, you're gonna get what's called a margin call. So that means you're basically just gonna be like in debt to the brokerage, and you're gonna have to add more money. So a quick example, so imagine you're at a lemonade stand. You want to sell lemonade, but you don't have enough money to buy lemons, sugar, or cups. So you ask your friend to borrow some money to buy the supplies, and they agree, but they want you to give them a small piece of your lemonade profits to make sure you're serious about selling lemonade. That's basically margin in real world terms. So in futures trading, the margin is like that small piece of the profits that you promise to keep as a promise that you'll follow through. It's a little bit of money that you put up when you agree to buy or sell something in the future, like that lemonade. So basically, if you make money selling lemonade, you're gonna make money, but if it go bad and you lose money, then you're gonna be in debt basically. So that's margin explained in a quick way. Now, technical analysis, fundamental analysis, and back testing. So technical analysis is basically the analysis of the charts, and that's the candlesticks and all of that, the patterns and all of that. And you can use moving averages to basically help you get a better picture of where price is headed and what the market current market conditions is. Candlestick patterns, that's basically different strategies like supply and demand breakouts and stuff like that. Support and resistance level, these are areas where price tends to reject or price tends to hold and not break past that level. So that's technical analysis and a brief explanation, but it's basically your strategy. Whatever strategy you have, that's your technical analysis. Fundamental analysis, this is more like looking at the news and what's going on in the economy. My bad, yeah, my bad. But fundamental, that's like looking at the news and looking at what's going on in the economy and stuff like that. If you're serious about trading, you want to combine that with technical analysis, and that will help you make better predictions about where price is headed. Backtesting. So backtesting is like practicing for your strategy. Backtesting is basically going in the replay mode on the charts and playing through past months or days and looking for your strategy and seeing how it plays out, and marking up like how often it wins or loses, and just seeing the stats and your win percentages. Backtesting also helps you get better at seeing your strategy and get more confident with executing your strategy. So if you're serious about trading, you're gonna want to be backtesting a lot, but not too much. You want to backtest a lot, but not too much, because that can mess you up, backtesting too much. But yeah, once you learn your strategy, you backtest it, and that's basically it. Like that's how you backtest. Now moving forward, we just covered all the beginner info that you need to know in like 20 minutes worth of videos. It's not really that much that you need to know to get started. Hopefully y'all took some notes, and hopefully y'all learned some. Let me know anything that you feel like I didn't cover, or anything that you got a question about. Just let me know in the comments, and I'll try to help you with that. But moving forward, now that you know all the beginner info, you need to find a broker and a platform that suits you and learn how to navigate it. So the broker that I use Trae. It's a pretty good platform. I like it, but you may not like that. So you can either trust my word and use Trae, or you can go do some research on YouTube and find, like, listen about the different brokers and see which one you like best, and learn how to navigate it. You can find YouTube videos on tutorials on how to navigate the brokers, and TradingView is the main platform that you're gonna want to be on. TradingView. Next, you need to learn a strategy. I have videos out on my strategy already if y'all want to learn that, or you can find plenty of thousands of strategies on YouTube for free. So you can go do that, and then you're gonna want to backtest that strategy, and you're gonna want to backtest at least like 100 trades. Yeah, backtest at least 100 trades, and just see what's the win rate, and basically just to help you get comfortable with seeing it, and to where it's just automatic. And then trade demo and gain experience. So with trading, once you learn everything, the only thing that's left is to just gain experience. Like, I'm still gaining experience myself. Like, that's the only thing with trading. Like, a lot of people quit early on because they don't have enough experience. But if you just focus on gaining experience and keep going, you're gonna get Like, you have no choice but to get better over time. Like, there's no way you can keep doing something continuously for an extended period of time and not get better. And after 2 to 3 months of profitability on demo, then you should feel comfortable enough to either open up a live account or take a prop firm challenge. I recommend, for me personally, I'm doing both. I'm trading prop firms and I have a live account that I'm building. I just started a series turning 1K to a fortune. So that's basically going to be my main live account, and I just want to document my whole process of growing it and compounding it. And lastly, just be consistent and never give up, because like, it's gonna be hard at the beginning, but it's gonna pay off, bro. Like, trust, it's gonna pay off. But that's the end of the video, man. Leave a like and subscribe. Let me know if y'all have any questions, and hopefully y'all learn something, man. But that's all, man. I'm out.